Hey guys, Stock Saturday, and been a little bit of volatility again for the week. I think, about even, maybe a couple of thousand down. Numbers sort of a little bit off. I don't think actually I included Meta in last week's portfolio. Actually, I've just sort of added it today, and I did buy that a little while ago. Um, but yes, I've also withdrawn about sort of 19,000. So yeah, sort of portfolio has changed a little bit. Needed to sort of spend some of that cash, so I've reduced my 300,000 to 280,000 for what is going to be needed. I think still the bulk of that for tax, obviously, a couple of 100,000 at least for tax. But yeah, so sort of pretty flat to a couple of thousand down, maybe just sort of a 0.2% or something. And the S&P actually is down 0.76%. So had 2 weeks of down now. And the Nasdaq is 1.61%. So it's a little way off the highs now. It was in the 26,000s, 26,100. I think it got a bit reasonable amount higher than that intraday, and now sort of touching 25,000. Did get to 24,558 during the week, so sort of top to bottom, if you like, for the week. It was 3.41%. Some reasonably volatile times. Haven't really seen anything that would be causing this, as far as a big story, other than the interest rate predictions sort of changing. The December meeting, I think December 10th, it was sort of 60%, 63% predicted for a cut. And it's now pretty much 50-50. If that causes a sort of an enormous drop, well, not enormous, an enormous drop for 1 week maybe in the Nasdaq, then I think we are on shaky ground, I would say, as far as valuations go. People are sort of basically expecting perfection and good news sort of near enough every week. So yeah, time to be cautious, certainly. Looking at a little bit of news, we got TSMC's monthly revenue number, which is a new record, 367 billion new Taiwan dollars. Currency obviously is moving as well, so that's a bit of a moving target. But yeah, previous high was April at 349 billion. But the growth rate obviously is coming down as we sort of start to be comparing to months that AI was rocketing up in sales. So 16.9% up on this quarter last year, or October last year rather. So yeah, 16.9%, still pretty strong. See what we get going into the last 2 months, but a good start as far as overall number is concerned for Q4 numbers. So always like to sort of get a little bit of a ahead maybe of what some people are looking at. I'm sure others will be keeping an eye on these figures, but don't see them reported all that often. So we got B2 Gold's Q3 results, and yeah, this is sort of pretty much the only gold miner or silver miner that I'm still kind of interested in buying. Sort of keeping a close eye on the options, sort of long-term options, January 2027 and 2028, because I think B2 Gold still has plenty of, plenty of good news ahead of them. And yeah, $4.10. Market didn't particularly like these results. I didn't see why at all. But yeah, they produced 254,000 ounces of gold for the third quarter. That's pretty good. They've still got their Goose mine that has sort of just pretty much ramped up, so that should be adding to the total. Sort of hoping for maybe an optimistic target, once they're in full production of 1,150,000 a year. Could be sort of more like 1.1 million, but yeah, that would be a really, really good target for, what is currently like 4 billion, 5 billion dollars less than Equinox. They do have a bit lower quite a bit lower mine life than Equinox, but what they also have for this quarter at least, but it seems pretty consistent, is $1,479 all-in sustaining cost, where Equinox I think came in at 1,880. They are improving, but yeah, B2 are basically already there, and the Goose mine is a very cheap all-in sustaining cost mine as well, so that should help things as well. A little bit worse sort of jurisdiction maybe on B2 Gold. They've got sort of a little bit more at places that people aren't necessarily happy with. Everyone wants sort of Canada and America, but there's a lot of restrictions in America anyway. So yeah, I'm not all that bothered where it's coming from, unless there's sort of likely risk of war or sort of mine shutdowns and that sort of thing. So yeah, we'll see. They're expecting Goose to produce 50,000 to 80,000 of gold in 2025. Not all that interested in 2025, to be honest. It's going forward once it's fully operational, and they do still, I believe, have their pre-production that they sort of sold. So you get a load of money in for selling future production. That was July this year until June next year. So they've had the money for it, and they're now obviously having to spend costs on producing gold to then give away. So it does affect the income statement from what I gather, and that should essentially go away after Q2 next year. So that's pretty good. So unlike your Equinoxes and Coeur Mining and people like that, B2 don't actually have a huge amount of debt, even building out this new Goose mine. So they don't exactly have a lot to deleverage, and they are doing both buybacks and a admittedly very, very small dividend, which yeah, I would sort of rather they weren't doing the dividend for the sake of my options. That's kind of being a little bit selfish. You don't get dividends on the options, so you're basically just hoping for a higher share price. So I would kind of rather they either just reinvested the money or did buybacks. Obviously, buybacks help the share price, and since I don't actually hold any of the stock, I'm all in options, then yeah, dividend sort of doesn't really help me. So I'm kind of glad that it's only 2 cents. But yeah, looking pretty good. So revenue obviously drastically up from this quarter in 2024, 448 million up to 783 million pretty much, and yeah, a massive loss. That sort of includes various non-cash things from last year. Looking into that, up to 23 million net income for this quarter. So yeah, 1 cent, it's not a huge amount, but that is still non-cash things. They have adjusted numbers. Yeah, they are saying outlook-wise, over the first 6 full calendar years of operation, the new Goose mine is expecting to produce approximately 300,000 ounces of gold per year. So yeah, that would be adding a tremendous amount to their current production, and even in the calendar year 2026. So they're not saying next year is going to be sort of a partial year as they get up to production. They're sort of, I would say, indicating that even next year is 300,000 out of the Goose mine. So add that to the sort of 800 and just pretty much on 900,000, could be getting to 1.2 million next year, which is very, very strong. With that sort of low all-in sustaining cost, I really think there is sort of good value good value in this company. Yeah, and looking at the balance sheet, it is quite a bit stronger than most of my other holdings, actually. 367 million in cash, which is pretty nice. Quite a lot of inventory, obviously. And yeah, your property, plant and equipment and all that sort of thing, 3.7 billion. It's always high. Need to check what the long-term investments was. But yeah, still got this 423 million of prepaid gold sales, so that sort of just naturally goes away. And yeah, 607 million in long-term debt is quite a reasonable amount. I suppose they want to be paying that down, but that paid for their large expansion. And yeah, Equinox has whether it was 1.2 billion. So for a similar production capacity for B2 are sort of doing maybe 100 or 200,000 more than Equinox. They have sort of about half the debt, so that's pretty good. And yeah, Goldstream obligations and things, some of this sort of goes away over the next year, looking pretty strong. So coming over to my sort of one of my favourite little hidden gems, KGHM is certainly starting to come good. Sort of spent a while in the 125 range, and now at sort of 195. I think touched 200 this week. Is looking pretty good with, I presume, with mostly coming from the silver price rise. So very good for them. Still, believe the second biggest silver producer in the world. They don't sort of, whenever I see sort of top 10 silver producers, sometimes they don't even count KGHM in there because they're sort of thought of as a copper miner and the silver is a byproduct. But yeah, don't really see why that matters. A lot of sort of they often count Southern Copper in those top tens, and they are, I believe, even more copper focused. They have a smaller proportion of silver coming from their mine, and they're still counted in there. So don't know. People don't like to look outside of the US market, but yeah. Numbers looking reasonably good, sort of similar, basically production similar or a little bit worse in some areas to last year, but prices have gone up, so that is why the stock price has gone up. Copper production, this is for the 9 months. A lot of these numbers are for the first 9 months of the year, so Q1, 2 and 3 rather than just Q3 by itself. Whether they're sort of thinking Q3 isn't quite so good and just wanting to roll it all up. Don't know, but I know some companies sort of will play those little games sometimes. But 526,000 tons compared to 544 last year. It's a little bit worse. There's sort of various reasons they've given for that, sort of maintenance and all sorts. But yeah, sort of pretty much at their 2025 targets. They sort of give these targets and bar graphs, which I quite like compared to other companies, just sort of guidance numbers. It's good, gives you a little bit more of a visual representation, and you can see sort of they're ahead in some areas, over 80% through of their 2025 target, which you'd obviously expect to be 75%, so pretty much there or above in everything. And I do like these long-term sort of stretch goals as well. They sort of took 2010 as a base year and basically 10-year goals of where they want to be. So they want to be doing a hell of a lot of recycling of scrap copper. They're sort of not really progressed too much on that. But yeah, silver, sort of, they're basically saying silver is going to decline a little over time, but in 2030 still doing 1,200 tons of silver. That'll be 40 million ounces or something of silver. That's still a massive amount of silver, and we're going to need it sort of going forward. and 600,000 tons of copper. So pretty good. And they're saying, they've done 421,000 in the first 9 months. Obviously, that's 600,000 for the full year. So yeah, in 5 years away to still be doing that, I would be pretty happy with. They're not looking to sort of drastically grow production. Just sort of keep doing what they're doing, which I'm pretty happy with their production numbers. It's the profit that is looking a little bit better. Revenue actually down 1% on the previous 9 months, but adjusted EBITDA, it's always sort of has to be adjusted because there's various investing and non-cash items that goes in with them, and foreign exchange is sort of the big talking point at the moment. Total expenses is up 4% compared to the previous 9 months, which isn't super helpful. This has sort of come mostly across the board, quite an increase in labour cost, but yeah, that's it's not absolutely ideal. But unit cost itself down to $2.60 from $2.75. It's sort of been highlighting this in previous quarters as well. I'd kind of rather they gave this as just Q3 rather than the 9 months, but that's what they want to do, I suppose. This had largely come from their international side and the Sierra Gorda share of the mine that they have. 98 cents, down from $1.81. I'm guessing that is sort of including the byproducts and things with silver in there. The international side, $1.04, down from $1.69. So these aren't all-in sustaining costs. This is C1 cost, as they call it, cash cost of concentrate production, reflecting minerals extraction tax and admin expenses and all sorts, but not less depreciation and the value of byproduct premiums. So yeah, you could end up with this in theory going negative, but it's not actually all-in sustaining cost. So yeah, not ideal. You'd like to see all-in sustaining cost. And the main mines are up to $3.14 from $3.08. So as I say, it's really the international side that is doing well. But yeah, total profit actually being weighed down by foreign exchange. So the first 9 months we've seen a very, very weak dollar, which sort of increases the Polish zloty exchange rate, and then converting profits back into that looks a lot worse. But I suppose if we then compare next year and that doesn't change and they're still making good profits, then you won't have that exchange difference. But I suppose the profit won't have increased. But yeah, it's a little bit swings and roundabouts really. They have been investing quite a lot. These are, very big mines, and copper mining is incredibly capital intensive, so it does have to be a lot of money reinvested just to keep producing what they are really. And yeah, balance sheet sort of looking about the same really. Net debt in dollars. Again, you can see the currency differences here. Sort of net debt increased by 25% in dollars, but only 10% in Polish zloty. So yeah, you can see sort of how much difference that makes. Just looking at their hedging as well, I didn't sort of highlight this in previous quarters, I don't think, but I'm sort of kind of glad that they don't do all that much hedging, because if we're sort of bullish on the price of copper and certainly silver, you don't want them sort of hedging too much, which, if you're not aware, is sort of basically pre-setting a price that you're going to sell your production at. So if the actual price drops, then you're not sort of exposed to that drop. You get the price that you've pre-agreed. But if price goes up, you don't really get the benefit of that. So the companies that sort of hedge an awful lot of their production, if you then get metal prices going up, you don't see as much of the gain from the miners that do that. But sort of looking at these numbers, if you take the first and second half of 2026, sort of looking at 50,000 and the hedges that they've implemented in Q3. So what is that, 75,000 tons of copper. If they're doing 600,000, it's a relatively small proportion of that total. And then sort of silver, what have we got? 6, 7, 8, 9, 10, 11. 11,000 ounces. Well, no, sorry, 11 million ounces out of about 44 million ounces. So yeah, they do about a quarter of their silver, which isn't ideal. I'd rather they did less than that. And sort of 15% of their copper. So yeah, it's a little bit. Some do a lot more than that. So yeah, it's a little bit. Some companies do a lot more than that. I'd rather they did less, and we just had sort of full-on exposure to the price. But I guess they're not always going to do that. And yeah, they're reporting their sort of sustainable energy that they want to be producing again, sort of 2030. They want to be doing an awful lot of their own sources of energy, and yeah, the 2020 was 105 megawatts. They're now doing 174. Not sure whether that, yeah, that's saying first 9 months they produced 174. If that is, a little bit more to go, presuming this 220 would be the full year. So yeah, would have to sort of double check that. I don't think they're quite confirming here. Maybe that means not what a 9 month of their 2030 goal would be is 220, and they're at 174. I guess we'll assume that. So overall, I'm still pretty happy. Net profit is a little bit down, as I say. Part of that is just FX actually, so it's not ideal. Profit for the period. Yeah, profit for the main sort of Polish European side is down quite a bit. It's just sort of partly strength of the Polish zloty against the dollar, and then sort of the international areas doing incredibly well. So a little bit of a mix, really. Adjusted EBITDA, excluding all of netting all of that out, is up 5%. So yeah, still think there's sort of better times to come, and obviously the market agrees because they're at 195 now, so looking good. So economic news, there's not a huge amount. We did get the government, US government reopen, so market doesn't seem to be all that happy with it, but I still think that's going to provide an enormous amount of liquidity. A lot of people talking about that, but yeah, we had a little bit of news this week. UK employment numbers looking rather poor. Unemployment went up to 5%. It was expected to rise, but not to 5%, and that's a bit of a sort of headline number. Made all the papers and the discussion, and GDP numbers and industrial production and all sorts quite a bit worse than expected, in the red on industrial and commercial production. And yeah, we didn't actually get any other real data because of US shutdown. So yeah, not the best. So overall on the portfolio, I don't really get sort of all that much change now that I've bought a lot of what I would call normal stocks. My sort of Amazon and Applied Materials and people like that as my top holdings now, as far as individual stocks go, is quite a change from what I used to have, and is not really so volatile. Pie chart starting to look a little bit more normal. The heavy cash. Not sure whether I should sort of show it as not 16% cash, because most of that is set aside for tax anyway. But over time, this will start to look a little bit more normal. I do sort of, my portfolio weights will change as well, because the crypto portfolio over time should largely come into here. It may entirely come into here as well, because I've got my Bitcoin and Ethereum in the ISA, which could, in theory, increase, and I sell off the whole of the real crypto, if you like, and my sort of crypto allocation could all be in here. So could, in theory, have like £250,000 to sort of add to the stocks, which would increase all of these targets. And the ones that I'm, saying that I'm overweight on, if you like Next Era Energy, sort of saying maybe 1.5% of that, in my portfolio. I'm currently at 1.85. If the sort of total portfolio were to increase, it would probably say that I'm, about even, or maybe even a little bit underweight on that. So yeah, the spreadsheet sort of will change over time. Looking at the options, been quite a bit of change there. The Equinox has rocketed up to 122,000, looking really, really solid at the moment. I should probably show these on the spreadsheet's gone a little bit funny. But yeah, on the options, 486% now on Equinox, looking pretty strong. B2 Gold sort of increased ever so slightly. Iron is quite a bit down with crypto this week, but Hive is the big red for the week. This was, I believe, at 50,000 just last week. So that's taken a hell of a hit, with the Bitcoin price being at sort of 94,000 and difficulty up. So yeah, double whammy. And then yeah, my other three, sort of Kur Mining, barely moved. Max not having a particularly fun time of it. Sort of come to their earnings at some point. It's only a fairly small holding at the moment. So yeah, and Nakamoto, the little sort of treasury company bet, is way down. Although those are March options rather than January options, so there's a little bit of time for Bitcoin to sort of come good and people get re-interested in treasury companies, and sort of spending a little bit of my cash. I did actually move my a little bit more stock. I moved my BlackRock and AB Limited from the Trading212 into BlackRock, and then spent the cash in 212 on more ETFs. So my Nasdaq 100 is now quite a bit bigger. S&P small cap 600 quite a bit bigger, and I bought a little bit of robotics and clean energy. So yeah, both of those increasing. Obviously still a long way to go to get to my 40% ETFs target, but as I say, I've still got sort of £250,000 of crypto still to funnel into here at some point, or hopefully a lot more than £250,000 worth of crypto if we have a bit of a run. So yeah, leave your thoughts in the comments below. Been an interesting week, and like and subscribe. See you soon.